Hi, John.
Hi.
What can you tell us about the new lease accounting standard?
The new lease accounting standard is going to significantly change the way we're accounting for leases. So right now, you're used to seeing the leases as an expense show up on an income statement. Well, now what's going to happen is these leases are actually going to be brought onto the balance sheet. There's going to be new terminology. There's going to be an asset called a right of use asset and then a liability called a lease liability. This is going to apply to leases of property, plant, and equipment, and generally those that are greater than 12 months long.
Great. So it does sound like we have some balance sheet presentation changes coming our way. Will this affect our business owners' taxes?
So for the taxes, there actually will not be an effect on taxes. It's an accounting. First off, it's an accounting standard change. And then secondly, it actually isn't going to have much of an impact at all on the income statement presentation.
That's great. What do our business owners have to do?
I think the most important thing to do is to make sure that they understand the timeline for the implementation of the new standard and that they allocate the resources, the people, and make sure they have enough time and education necessary to implement the standard. When we talk about the timeline, the new standard will be effective. It's going to become effective on January 1st, 2022. Okay, so our December 31st, 2022 financial statements are going to be the first time you see them on a full year set of financial statements. But we can't wait until we're deep into 2022, certainly not when we're preparing the 2022 financial statements to get started. It needs to happen earlier than that.
Okay, so as long as our clients are proactive, this shouldn't be an issue at all. Is there anything that our financial statement users have to do?
I think the first thing is make sure that they have a decent level of understanding on the new standard, so that they know what it's going to look like when it comes out. And certainly, if you have like your standard analysis, a lot of people will have their ratio analysis when they're looking at companies. They're going to have to consider adjusting those sorts of things. If any, like a bank maybe has a debt to equity ratio requirement on loans and those sorts of things. Certainly, those agreements are going to have to be looked at and adjusted accordingly.
Well, great. Thank you so much, John.
Thank you.